We are seeing a lot of strong minerals resilience and demand despite the weak earnings season. Joining us here in the studio, Dale Gillam and Philip Tortevsky. Good to see you, gentlemen, here on the program. Dale, I'll start with you. Why so much materials momentum?
Well, we're seeing, when you're seeing growth, you see materials, obviously, and they always go through, we have that whole cyclical thing that materials go through. And right now, we've seen for years material sector has been really lagging behind, but now what we're seeing is this catch up from it. So we've been talking about materials for like a year or something, haven't we?
Yeah, I mean, look, they've been the best performer, surprisingly. The retail sector was what everyone was harping on about during the earnings season, but the materials sector was the best performing sector in August, and they've really gone on with it now. We've seen strong commodities, as Dale mentioned. Gold is running at all-time highs. Lithium is starting to tick up. We are seeing some moves in the underlying commodities, which is supporting.
Look, I guess the obvious question is why, Philip, why? So the ASX Materials Index hitting a record high, why?
Well, they're the biggest players on our market. You talk about banking and mining, that's the Australian stock market. Conversely, the US, it's the tech sector. And right now, I think it's a case of better than bad. During earnings season, there was this talk coming into it that materials was going to be terrible. And it didn't report so bad. The buyers have supported price right now. We're seeing Rio starting to kick off that lithium story. Gold, obviously, there are the underlying factors that are, central banks are hoarding gold at droves, and that is running at all-time highs. So it's it's a materials play right now leading into the final quarter, I think.
Yeah, Dale, that's a really important point about gold. When we think about materials in Australia, we think about iron ore. We've seen some issues with BHP in China in that regard. We've also seen the iron ore price dropping as well. Is gold saving things at the moment?
Well, you think it would be. I mean, gold's at all-time record highs, and what we're seeing is a bubble on gold happening right now. We saw it, I think 2011, 2012, there was also one. And when you're seeing lines of people outside the gold bullion exchange in Sydney buying gold, and Australians have never traditionally had a love affair with gold at all. When you're seeing that, now you're starting to see
Which is strange for a country, particularly the southeast, built on gold.
Yes. Yeah, I mean, US definitely, but not Australia. And obviously Asia is very big on gold, but not Australia. But you're seeing people lining up to get it, which means the boom's happening right now.
You'd be wearing a gold chain, wouldn't you?
Well, I do occasionally with the rings and everything else. When I go to the nightclubs.
Ah, the bling, bling, yes. Yeah. Philip, talk to us about investor confidence returning, because miners' profits have been a bit softer.
Yeah, but what we're seeing now also is the, I guess, lower end of the market, the small caps, really finding their feet. And that is a real telltale sign that there is bullishness in this market. When you see the lower caps start to take charge and outpace the higher indexes, you're seeing the real growth coming through. And I mean, it makes sense. A lot of our market, you take away the top 500, is mining
small cap
stocks, right? And with the gold price the way it is right now, those margins are ever increasing for these low-cost, smaller producers. So exciting times.
Dale, what does it mean for investors? If you're an investor watching this and you're seeing small cap miners doing okay, the softer profits not deterring buyers, is that a bubble? Is that something which is likely to you talk about gold being a bubble. Is this a bubble?
Not so much yet. I think we're still thinking our stock market's got maybe 12 months to 2 years to run. We are at that last stage of this longer term cyclical cycle on our market. We roughly have a crash every 20 years, 87, 2007. So we're still in that last phase of a bull market. It's a buying market at the moment. And as Buffett said, always buy in doom, sell in boom. And there's still a lot of doomy uncertainty around the world at the moment. And I think it's a lot of opportunity, small caps, mid caps. But don't forget some of these big mining stocks that Phil's talking about. They're really good. Energy's looking really good as well. And healthcare's another industry we're looking at.
Gold, particularly for the small caps, has been a bit of a rough sector for a lot of investors over the past 10, 15 years, right? We've seen some good news, we've seen some bad news. But what we now know is that the gold boom, the exports, are expected to hit, what, about $60 billion next year?
Yeah. Yep.
So what does that mean? What does that mean for investors?
Did you want to handle that one, or?
Well, to me it means opportunity at the moment. So whilst gold, all bubbles start somewhere and they finish somewhere. We're nowhere near the end of the gold bubble yet, but when we're starting to see the lines like I'm seeing on the TV at the moment, that's when it's like the whole snowball effect, isn't it? More people get into it, the more people want to get into it. And so they're buying physical gold at the moment. We'll start seeing traders, the traders will be trading gold futures, they'll be trading ETFs and CFDs in gold companies as well. But there's some really great opportunities in some of our smaller gold miners at the moment, and possibly a little bit on some of our bigger ones.
I'll push back a little bit on the idea of the every 20 years, the 87 and the 2007, because we have a Donald Trump in the White House. And the gold price, as we know, is very much connected to geopolitical events. And has there been a time like this before where you've got Middle East up in fire, now not, still big questions about the escalation in Ukraine? It's very hard to predict where things will be. So how can we predict that 2027 is hang on to your pearls?
To me, it's the Donald Trump effect is there, but we've had stuff like that before. We've had presidents that have, just now with Trump, it's just the social media. It's much more immediate, but we've also had lots of situations. Middle East is not new. There's constant wars in the Middle East. There's always been some war going on somewhere in the world over the last 100 or 200 years. So we're seeing a lot of things. All that's happening with Donald Trump is he's flipping and changing things. So he's creating a lot more volatility. So it's sort of like when you've got momentum, the market runs on momentum and volatility. If you've got momentum, that means it's going to go from point A to point B. The volatility is the Trump announcements. It'll either accelerate a bit and it'll go the opposite way. So I don't think he's going to change the momentum. It's just how the volatility unplays.
Yeah, all right, Phil, let's talk about how it's benefiting, I guess, producers like Newcrest and Northern Star as well.
Well, every rise in sorry, I got a frog in my throat. Every rise in the underlying gold price means bigger margins for these players, especially the profitable producers. So I think it's important when you are looking in this space. There are some that are quite unprofitable, getting to becoming more profitable. Really do the research and find those profitable players, because every tick up in the gold price just adds to that profitability.
And what does it mean for lithium, the bounce back there with the prices showing a pretty strong rally?
Well, it's quite huge. I mean, Rio put a big bet, billions of dollars into lithium back in March, and that was at the time lithium was trading at all-time lows. So, I mean, couldn't have been a better play for Rio, but we've seen buyers come in for the first time last month since 2023. So we're seeing buying come in at these lows. That's only going to add to that story for lithium if it continues. I mean, it's still early days, but I mean, there's so much application with the lithium stuff, where the world's heading. So.
Yeah, and obviously, you know, we were talking earlier about geopolitical. Donald Trump obviously putting a lot of pressure on China over rare earths. We've got this meeting coming up between Anthony Albanese and Donald Trump. Why isn't Australia a bigger part of the conversation in the US about rare earths?
Look, I just think that up until
we've got a whole country here.
We have got a whole country, but I think until COVID happened and that we're pretty much scared the US that we don't manufacture anything, and neither does Australia, and I think it's scared us. The US has just reacted a lot better to this than what we have. Obviously, we've got a strong relationship with China. We want to maintain that, but we also have a very, very strong relationship with the US, and I think we need to develop our rare earths here, and Trump needs them because he doesn't want to rely on China. He was like that in his first term, remember? He was China this, China that, trying to reduce their independence, and that didn't happen during the Biden administration. I think he's needing those safe places like Australia that he can get.
But are we developed enough yet to give America what they wanted? I mean, I think it was President Hoover who came to Australia and taught us how to mine for coal. Do we need to have a bit of US intervention when it comes to mining for these rare earths to give them what they want and to build up that reliance on us? Well,
you look in the US, if people ask you who's the biggest investor in Australia, it's not China, it's the US.
Yeah.
And people are really stunned about that. So more US investment in Australian mines would be very, very welcome, and obviously helping us mine these things. But I think our miners are pretty good at what they're doing. Very good.
And Philip, talk to us Rio Tinto. Big bet may finally be paying off.
Oh, absolutely. I mean, there's nothing like getting into a market at all-time lows with the underlying price, and right now that could spell huge. And we're seeing with the Rio price as well. It's been stagnating for the last couple of years, sitting around that 38, I believe, dollar mark. But now we've seen buyers come in over the last couple of months. And I think Rio, with most markets, when they do have these big periods like the All Ords Index from 2020 to 2024, that compression type market, range bound, when we finally see a breakout, it gets into good expansion, which Rio is looking like it's on the onset of right now. So.
Yeah, an extraordinary time, particularly for these small caps doing so well, outperforming the ASX 100 since June too. Gentlemen, appreciate your time. Thank you.
Thank you.